Now, Lowe's, the second largest U.S. home improvement chain, will team up with Woolworths to enter Australia's 24 billion Aussie dollar hardware market, betting on an economy where home building approvals rose by the most in 4 years. For more on Australia's retail sector, let's get to Martin Lakos, Director at Stockbroking Division at Macquarie Private Wealth. He joins us from beautiful Sydney this morning. Martin, first off, what do you make of the tie-up between Lowe's and Woolworths?
Good morning. Look, it's clearly a positive move. It's going to bring more competition to the marketplace. But they're really behind the eight ball at this stage. They will be very competitive. They're looking to open between 120 and 150 big box store formats over the next 5 years. That compares to Bunnings, which has now got about 30% market share. So it would appear really that Woolworths is looking to target initially to take market share from the co-op hardware groups and the independents rather than from Bunnings. They haven't really quite got critical scale as yet. But they're always a very good competitor for the Bunnings group and also for the Coles Food and Liquor group. So you've got to take this obviously very seriously. But to be able to get really good sites in the Australian market, they're going to have to pay up to about $1.8 billion in total, on our estimates anyway.
How soon do you expect to see the benefits? I mean, what time frame should we be looking at?
Well, it does appear they might have about 6 sites already bought, but obviously they've got to build these and get them up and running. But that, again, that's 6 out of a possible 120, 150 sites. So over time, they're going to be looking to picking up, 30 or 40 sites every year for the next 4 or 5 years before they really are matching Bunnings' critical mass and really can take on Bunnings in that respect. Also, they're going to be looking at a slightly different marketing campaign. Bunnings very much has a category killer and very much on the pricing side, the discount pricing side. It would appear that Woolworths is going to try and focus a little bit more on home brands, and obviously they'll be trying competitive on pricing as well.
Hey, any impact on Woolworths stocks going forward? I mean, should we be reviewing its price target?
Look, we've got the stock around current levels of just under $29. It's pretty much at fair value for us at these levels. But we like Woolworths. Clearly very strong management, strong general market position, and most of its businesses are doing particularly well, the food and liquor side. Equally so for Wesfarmers, their main competitor, who hold Coles Food and Liquor and Bunnings. That looks a bit better value to us. We've got about a $30, $28.50 price target, should I say, and it's currently around $25. So it might be a bit of upside to Wesfarmers at this stage. Wesfarmers also has rebounded very strongly, having been sold down very heavily through last year's market volatility. The stock's now rebounded 63% to current levels, and that's included a significant capital raising at a price of $13.50. So the stock now at $25 has had pretty strong performance. The most important thing is that the recovery of the Coles Food and Liquor business and the fact that Wesfarmers have done some major balance sheet repair really puts it in pretty good stead at this point in time.
All right, Martin.